All right, there's a couple things happening in the S&P 500 right now, which is the what I use to indicate where the general market is going. We had this head and shoulders / descending triangle. Well, the measured move was hit in rapid succession here. We've got a level of support at 111, and recently we have these declining new highs. So we got a high here, another high here, because this is basically a reversal candle. I can't say that it won't reverse, but I don't think it's going to reverse from here. This is probably the new pivot top. Connect the two dots, and you have a trend line. So what's likely to happen, in my opinion, is another kind of descending triangle / a pennant or flag, something of that nature, indicating a further move lower in the near future. How fast is this going to happen? It might take another week or two for this pattern to continue playing out. Let's say right in this area is where it should be breaking down if it's going to. That's September 12th. Close to that range, so when it comes down, retest 111 again, come back up, test it one more time, make another low high corresponding with trend, and then breaking down. It could even potentially break down sooner than that. It could come down here and just keep going. Depends on how when we get a catalyst and how weak the market actually is. But money is definitely moving out of the market right now. I am still not bullish at all on this market, and I won't be for quite some time. I don't think there's the fundamentals of having the budget deficit that we have, and the Federal Reserve System itself is, I think, basically failing right now. We had all this bad debt turn, and the government bailed it out, so that's the Federal Reserve basically. And so the money has moved from the bad companies, which could have filed for bankruptcy, reorganized, and made a stronger economy. But since that wasn't the case, the government bailed out several companies, and now that bad debt has transferred to the Treasury system. So essentially the government has all the bad debt in the Treasury system, which is going to cause major issues down the line. So I'm not bullish on the market, and I won't be for quite some time. It's going to take a major overhaul of policy, and I don't think we can even have a chance of getting all this without raising taxes. And that in itself will have an initial negative impact on the market, but in the long haul, it's the best thing we can do, considering the system that we have. We need to get out of debt, at least make it a manageable level, and then go to a balanced budget system, or even potentially down the road get rid of the Federal Reserve System altogether. If that'll happen in my lifetime, I don't know, but right now we got to deal with what we have, and it's probably going to be pretty much downhill until that happens. I'm just going to circle this area here that I think it's going to break down from. So it's going to break down from here, and I think it's going to happen within this time frame. When the price gets over here, it'll drop down. Now, this 10-year Treasury yield, historically it's been a flight to safety. and it has been recently, because as soon as the S&P got downgraded, people flocked into it, and here's the drop. So, and we've been hanging around this level for a little while. If we back up to, say, a weekly chart, you can see a potential. Well, there's two potentials here. Potential double bottom, one bottom, two bottom, and it'll go higher from here. Or what I think is the more likely case, since it's a flight to safety, is a descending triangle, meaning it's going to potentially come up here and retest the downtrend. If it breaks the downtrend, that'd be your confirmation of a double bottom. If it fails from the downtrend, that's your confirmation of a descending triangle, and at that point, triple bottoms are very rare. We're going to end up with very, very low interest rates, yields on government debt, and that is pending no other downgrades of the U.S. economy. If we get downgrades of the U.S. economy, interest rates will go up because risk goes up. Or at least, I can't say risk goes up, but perceived risk goes up. And the risk essentially stays the same, whether it's rated AAA or triple B or even lower. It's just a label. But perceived risk goes up when downgrades happen, which affects interest rates, and interest rates go higher because of the perceived risk. Gold been skyrocketing. Let's go back down to a daily chart. Went parabolic, dropped off a little bit. We do have, here's a little bit of support. Let me get my line segment instead. Here's another little bit of support we hit today and tested it. It could bounce and keep going higher yet. If this 167.50 level, 170 level fails, then we're back down to essentially, there's a little consolidation here, and we're back down to 155 on GLD. I don't necessarily think that's the case. It's a fear play. It's probably going to actually bounce off this 170 level and continue higher. That's my opinion, that's my gut feeling, but be aware that if this level fails, you need to get out because it's going down to 155. Silver, there's a couple things happening. So we've got the continuation of the channel, We've also got the potential later on for an ascending triangle here. We've also got the potential that this is a symmetrical wedge here, and it just broke out and is retesting that level. And if that's the case, it's going higher. If it stays in the channel, it's going higher. If it makes an ascending triangle, it's going higher. Until this trend, this uptrend gets broken, it's going higher. You want to buy it on the dips. Once the trend is broken, then we need to reevaluate and see what it's going to do. But until this trend is broken, silver is going higher. The US dollar has typically been a safe haven for investors. People buy it when they're afraid because historically it's been safe. Now in recent times it's not quite as safe, especially if we get some more downgrades in here. So we had this basically a bear flag. It wanted to inflate. We had a little fear come in the market and stopped it from inflating. What I'm seeing now, though, is a potential for basically a descending triangle here. But I think that this descending triangle is probably going to fail, just because of the 1/3 rule from the zero line. I would put the zero line probably here, so it'd come like up here, and then this would be about your 1/3 and your 2/3. If it was going to break down, it should have broke down in this area here in early August. Hasn't done that yet. I think it's going to fail. I think the dollar is going to go higher. It's going to deflate, and which is a negative on the market. Once again, it's a fear play. Dollar goes higher because people flock to it, because historically it's been a safe bet. I don't know that it's necessarily the safe bet, but if money flocks to it because they think it's safe, it's going to go higher. Just a quick note on Apple. Steve Jobs resigned. He's going to back down and become a chairman. So we've got this rising channel on Apple. A little wedge going here, symmetrical wedge. Still, okay, so it gapped down, rallied. That's showing strength to me. So Apple, pending it can break this downtrend, I think Apple still has a little bit of room to go. It's a leader. It's kind of in a market of its own. With that being said, there's a lot of news going out there. It's going to be very volatile. So if you're not exactly sure what you're doing in the markets, it might not be a good idea to try to navigate it. It's also really expensive for basically my target market, which is new and novice investors. At 373, it's going to take a lot of bankroll to get enough shares to even do anything with this. Alright, it's been a long time since I talked about the VIX. Now, I haven't touched my charts. Let's see how I did. So, how do you think I did? Did I call it or not? I mean, I had a line drawn way the heck up here and said it's probably going to go up there once it breaks out. It did. Now what are we doing? So we've got essentially your typical flag going here, your pennant. So you got a symmetrical wedge, likely to have a continuation. How high? Well, the measured move takes us up to 65. So just draw a line in here at 65. If it reaches that, where historically is there resistance? Okay, 65 kind of corresponds with this little pivot high here towards the low portion of the recession. So right at 65, there really isn't a whole lot of resistance. There's some resistance here at 54. There's also resistance at these previous highs, which will be the next area. That'll be 90. Now I'm not going to make a call that it's going to go that high, but I think that anywhere between 54 and 65 is reasonable for this next move. Let's see here. Actually, if you go back farther, here's a level, a pivot closer to our 65 range. So there is going to be some decent resistance there. So everything points to about 60. Let's just call it and round it off, because round numbers are resistance too. Round it off at 60. So I think the VIX is going to go higher, which of course is usually negative on the markets.